Hello, everybody. Bobby Piton here, and I am. How you doing, Jules? Good to see you. Just getting situated here, and I want to kind of go over um, another example. I know we talked about some bank stocks today, and I want to talk about another one. Not used to this sweater with this shirt, folks. I'm all getting all comfortable. Anyways, um, I got to get used to looking at this camera. I'm not used to looking at it. It still kind of makes me feel weird. I'm used to looking straight ahead. But anyways, with regards to, um, you know, we talked about the bank stocks a little bit today. The S&P hit another new high today. The Nasdaq was still, I think it might have hit an intraday high as well. In particular, the index that I like to look at is the QQQ, and right now, let's take a look at a couple of these indexes. So what I'm going to do is I'm going to switch over to my other screen here, and I think until I have a handler where somebody's kind of flipping these things back and forth, you got me doing it. So I'm going to switch over to here right now, and I want to talk about this company called Bed Bath and Beyond today, and I want to kind of give you a little bit of insight as to Bed Bath and Beyond versus some of the other companies. And like I said, the big thing is, the Nasdaq today, it didn't hit its all-time high. Today it hit 10 cents below that. It hit 340.98 before it sold off about 1%. Nothing major going on there. The S&P did hit an all-time high. Oil had a really big day today. So if you look here, USO, which is a proxy for oil, was up 3.96%, or about 4% on the day. That is a really big move on oil relative to the indexes. And, nothing going on with the treasuries. So, once again, folks, if you recall, I did the information about how the inflation number is kind of bogus in this country. And those numbers don't jive with reality from what we're seeing. And that, you can just look around at the pricing that we see everywhere in the world, and there definitely seems to be a disconnect between what the government says and why we need to come up with our own data sources and obviously look at alternative sources. You don't just need to focus on. I'm just happen to be one market participant out there. I'm doing this, but there's other people that are probably presenting information as well that are probably more thorough than the government in the way we see it. But one thing I do want to point out that did come out today, which is important to think about, is this number right here with regards to import price index. So this number, okay, this came out at 1.2%. The estimate was for 0.9%. Now, it may not sound like a big deal, folks, but 0.3% is a huge deal because 0.3% on import prices, that's for 1 month change. So if you take, that number, 0.3%, and I'm going to just show you real quick here in Excel. I was just using an example here earlier. Hold on a second. So I'm just going to kind of expand this. And I want you to show the magnitude of this 3%, okay? Which if we just take 0.03% and we take it up to 12, which is 12 months, and if it were to stay at that kind of number, it comes out to 3.66%. So it's not exactly 3.6, it's compounding on the compounding. And depending on what the base is from the previous year, it has a bigger magnitude. So import prices, folks, that's our cost of goods from other countries. So that's suggesting one of two things. Either the dollar is falling, so then we have more inflation from the value of our currency, or these prices that other countries are charging us are going up. But you have to account for it somewhere. And so this coming out is a big deal. Maybe this is why the market's kind of sold off, but this was in the morning. This was at 7:30. So, sometimes there is a disconnect before people start to see this stuff and then react to it accordingly. So now let's go to, we're going to go to our friends over here at the SEC, and we're going to say, okay, U.S. Securities Commission, let's go take a look at this company, Bed Bath & Beyond. So people, you might have heard of Bed Bath & Beyond. They have a couple different stores and a couple different concepts at Bed Bath & Beyond. You've probably seen, the flagship brand, which is Bed Bath & Beyond. But they also own a couple other companies. They own Bye Bye Baby. You might have heard of them. That's owned by them. They own, I think they bought out Pier 1. Let me double check. I think they own a couple of these other chains. I think they used to own linens and things, but Bye Bye Baby is one of the key ones. Cost Plus, they acquired them. One Kings Lane, so that's all part of them. So Cost Plus, when that got taken over, this is who bought them. So Bed Bath & Beyond bought them. So if you look, and the 8K is a report that's published that is like an earnings release. So it's not exactly the quarterly report, but it is, there is this report that came out today, and you could see that at what time it came out and so forth. There was an earnings release. It's tagged right here. You click on that, and you can see that, okay, Bed Bath & Beyond. How did Bed Bath & Beyond do? Now, keep in mind, folks, this morning I discussed what happened with Goldman Sachs as well as JP Morgan. So I want you to see firsthand what happened to a retailer, because the example I used this morning was what's going on with retailers. Like a retailer, a lot of these stores had to shut down because of this virus. A lot of restaurants shut down because of this virus. So then let's take a look and let's see how our friends at Bed Bath & Beyond did. Because obviously the banks, they were printing it. They were literally printing money. They made a lot of money in the past year when all this chaos was happening. Same with Goldman Sachs with investment banking. So how did the good old fashioned brick and mortar retailers do? Well, this company, obviously they didn't have the same luxury of what happened to Goldman and JP Morgan. Their revenue dropped 16%. This isn't a huge shock, but you can see that they also lost some pressure on margin, which means that there's inflation, folks. I've talked about wage inflation kicking in. Well, it's starting to show up because it showed up in this is a cost issue, but this is SG&A, selling, general and administrative. I guess that fell by more than the amount that sales fell. That's good. But the gross margin is usually the cost of goods sold. So you take the revenue minus the cost of goods sold. So if their margin fell by 110 basis points, that would make sense that 110 basis points might have been eaten up by inflation, because as they're buying stuff from overseas and the cost of bringing it over to the United States goes up, their margin gets hit. And that's why their margin might have gone down here, folks. With regards to, this is the 3-month. Now keep in mind, they're showing an improvement on the adjusted numbers. So this is the reported numbers. So the adjusted numbers, I'll have to look at that a little more closely, but we don't need to get super complicated here, folks. We need to just focus on the simple stuff. But one thing that I did think was interesting about them with this virus and so forth, their digital sales increased 86%. If you could see that, which is pretty crazy, right? Their digital sales almost doubled. Now, keep in mind, it was probably off of a low base, but doesn't change the fact that people's purchasing habits are changing quite a bit. And so when you look at this company, I think their earnings collapsed year over year. They still managed to make money. Last year, they were losing money. This year, they cut their SG&A by more than what their sales fell. Probably because they're doing more online sales. You don't need as many employees, and your cost of the brick and mortar and property taxes, all that stuff drops. And sure enough, they went from losing $65 million a year ago to making $9 million. So even though they've been hit with a pretty difficult environment, this company ended up making a small profit relative to last year on what they reported. Okay, so now let me show you, hold on a second here. I want to go through what they did with regards to how has this company done over time versus some other companies such as Amazon. So I want to show you this one. This is a really good case study because you can see back in 1996, 97, this stock used to be $2 a share. And it was as low as $1.22 in 1992. This has been around for quite some time. And then all of a sudden, it started doing pretty well. It went from $1 to $40. So you made 40 times your money in 12 years in Bed Bath & Beyond. And then they kind of hit some rocky stuff here. Stock dropped to $17.50 in the financial crisis. And then it just rocketed back up to $78. Look at that. So it went from 17 to 78. So then all of a sudden, I want to show you another chart side by side of this company to kind of show you how fast the fortunes of a company that did pretty well can change. And this is a really good thing to keep track of. Oh my gosh, you guys are going to be shocked when I show you this. Holy cow. Look at that. Come on. Can you script this any better? Guys, can anybody please tell me what they notice about this chart? Anyone? I'm going to tell you what, I'm not going to say anything until somebody tells me what they notice in that chart that I just put up. I'm going to put that chart back up, and I would like someone to type what they notice. Okay? You tell me what you notice in that chart that I just put up. Otherwise, I guess maybe I'm just... There we go, Caroline. Look at those threes. You got to love it. And they almost knocked it down 66. They got it an extra $1. So it was a tug of war. They had to think, do we do it at $66? And then it's 3334, or do we basically make it 3333? And I guess they went with the 3333. Anyways, I do think it's pretty damn funny, folks. If you think that this stuff isn't being engineered, I don't know what to tell you. Maybe this is just all chance, folks. But it is pretty interesting how this all plays out, isn't it? So. Once again, this is all for educational purposes. I have no opinion on Amazon, nor any opinion on Bed Bath & Beyond. I'm not saying to buy it. I'm not saying to sell it. I'm not saying to look at it. Just saying I guess I am saying to look at it. Look at it as an example. But when I meant don't look at it from whether or not you should buy or sell it. That's not the point of this. This is just for educational purposes here. But you can see that in 2008, right? Take a look at this. So we're going to look at our friend Bed Bath & Beyond, and you're going to see that right around, you know what? We'll go 2008 right here. Right. It hit $17. And in 2008, what was Amazon at? Okay, in 2008, during the financial crisis, wow, look at this. So Amazon... hit, oops, let me bring the chart over here, folks. So back in 2008, right around when Bed Bath & Beyond was $17, Amazon was $56. Oh, it hit 37. Okay, so Amazon was $37, okay? $37 in 2008, and this stock was $17 in 2008. So I want you to remember that. One was 37 and one was 17. So 37 and one was 17. So if you had $1,000 in Bed Bath & Beyond, we're going to buy $1,000 of Amazon, and we're going to buy $1,000, just $1,000, not even $10,000. Just we're going to go simple $1,000. If you would have bought $1,000 of Bed Bath & Beyond, you would have bought 58.83 shares. And if you bought $1,000 of Amazon back in 2008, you would have been able to buy 27 shares. So 20.27027. I love the symmetry. So you can see that, 58.8 shares versus 27 shares. Okay? So let's take a look at how they've done. So now if we just use those numbers and we kind of plug in, okay, Bobby, what are those stocks at? Well, Bed Bath & Beyond is $24.50 a share. So your shares of 20, it's the stock's at 24.50 today. So $24.50 as of today times 58 shares, you would be up 44%. So you would be up 44% in 12 years. So what is that in returns? Well, if you go up, 44%, and I guess in about 12 years, we'll just do 12, and then we go to 1.44, then you're talking about, whoa, that's not right, 1.440, no, this was future value is, we have zero, hold on a second here. So number of payments, number of periods, and then we're going to do 0 payments, and then the present value was -1, and then the future value was 1.44, and then the type. Okay, so there you go, folks. If you want to know what 3% a year looks like, 3.09% a year for 12 years. If you make 3% on your money for 12 years, you'll have about 44%, or 1,000 will turn into $1,444. So now let's look at Mighty Amazon. So Mighty Amazon, which figured out how not to pay taxes, putting their stuff into states where they could bypass sales taxes, get ahead. They didn't have to pay property taxes because they were going into areas like South Dakota and distribution centers where the property taxes are a lot lower. They did a lot of things to really cut their cost structure down. And as a result, this is what ended up happening, right? So let's take a look at how this is done. Okay. So, wow, that is something else, folks. $1,000 in Amazon since 2008 has gone up 90 grand. It's $90,000. 1,000 to 90,000 in 12 years. Now, you should be asking yourself a question. Why the hell don't any of us own it in size? Anyways, this is what's going on. So $90,000. So you ask yourself this, and you say, okay, Bobby, what kind of compounding rate would that mean per year to get to $90,000? Well, if you compound at 30% a year, you're at 23 times. We still need to get to 90. So now we're going to go up to 40% a year. Wow, 40% annualized returns. You have to basically, you get to 56,000. So 56,000. So now we're going to go up to 50%. Okay, that's too high. 1,000 would turn into 130,000. So then, since that's not the case, it's a little too high, we'll go to 45%. 45 is a little too low. We'll go 47. Oh, too high. So Amazon has done a little less, between 45 and 46% a year. Okay, folks? That's how well Amazon has done during this time. Okay? And so, so basically 45% minus 3%. That's the difference. It outperformed Bed Bath & Beyond by 42% year in, year out for 12 years. Okay? So, why am I showing you all this, right? That's a good question. Why am I taking the time to give you all these crazy examples? Because I think it's important that when you listen to some of these carnival barkers on the major media outlets, or you listen to people that are trying to give you quick rich, get rich quick schemes, or figure out how to make money, and they don't have a solid grasp as to why the money is being made. You should pause and you should think about it, and you should use some good old-fashioned common sense sometimes. In hindsight, I probably should have bought some Amazon, but I didn't like them from what they were doing. So if I took that out of the equation and I just said, I'm just going to focus on the fact that they know how to make money taking advantage of various arbitrages, you could have made a lot of money. And so, that's the dilemma of that people face when they're managing money. Like you want to do what's right and what's ethical. And in the case of Amazon, they weren't breaking any laws. They were definitely bending or putting up, going right up to the line and using the laws as to their advantage. Like obviously people have heard about them with regards to possibly monitoring all their employees in real time through software on the trucks, all that type of stuff. This is those types of practices that we frown upon, and myself included, folks. I don't agree with the privacy violations, or that companies think they own their employees the way they are when they treat them like this. But in terms of the return on capital and the effectiveness, it is higher. So it's kind of an interesting thing, because you have companies that are kind of clueless. They don't do any of this stuff, right? And it kind of shows in the numbers that they don't keep up with how the world's changing. They're not doing stuff to kind of change with the times. Everybody knew what Amazon was doing, folks. They told you what they were doing. They told you in the annual reports every year, but a lot of people didn't follow suit. And so I guess that's what I would say is the big lesson of this. When you hear about something and you think it's going to stay that way forever, or there's no reason for it to change, I want you to think of these charts, because here's two companies. One company continued to be paranoid and worry about being made obsolete. Amazon has always been super paranoid about being disintermediated, or somebody else would come up with a different way to do things. That's very clear from their language and their behavior that they do worry about that. And then you have a company like Bed Bath & Beyond that kind of fell asleep at the switch. They could have changed, but they didn't. Now, keep in mind that the overlap, and the reason why I use these two as an example today, number one, Bed Bath & Beyond reported earnings today. That's why I brought it up today. But number two, I think I remember reading in the annual report of Bed Bath & Beyond that they had like 65% product overlap with Amazon. So when you have a company like Amazon that is like Bed Bath & Beyond was issuing coupons, folks. You get these coupons in the mail, and it's like, come on in and you get 25% off. You got like 3 weeks, right? Everybody has seen the Bed Bath & Beyond coupons. I'm sure they've blanketed this country with it. This thing is doing $12 billion a year in sales, and they would run these coupon specials. Now, I want you to contrast that approach where you go in there, you have a coupon, and you buy the thing that you think is mispriced. You're kind of like looking around the store to find the best deal to use your coupon on. So you have this attitude of, I'm going to use this coupon, but I'm going to buy something I think they're not pricing properly. I want to get a deal. I want to get a double deal, okay? Now let's compare that to Amazon. You go into Amazon, you buy something on Amazon. They know everything about you on Amazon. And then all of a sudden, you get used to buying there, and you're like, Amazon's always giving me a good price. I'm going to stop shopping. I don't need to look. I just need to go on there. They're going to give me a good price. And then that's where they get you, folks. Because now you're not using the coupons. They don't have to worry about spending the money on mailing. Now they get you in there, and then they know what the odds are. If they probably monitor whether or not your phone looks at other sites in real time through cookies and other types of things to know if you're going to shop the item that you're shopping at Amazon anywhere else. And then based on what the odds are that you're going to look somewhere else, if you're not going to look anywhere else, they might nudge the price up 1 or 2%. If you look somewhere else, they might nudge the price down 1 or 2%. But I'll tell you, they're going to try to change the price in real time to get you to spend the money with them versus somewhere else. And it clearly shows, because that approach has allowed them to continue to pick up business at the expense of Bed Bath & Beyond and a lot of other companies in the marketplace. So that's about it today, folks. I just thought I'd go through it, as I'm kind of going through earnings releases. I'll maybe talk about a couple companies here and there, and like the way I am, so that you have some comparisons. And then obviously, if you don't invest in owning individual shares in companies and you just own indexes, and you agree with me that that's not the best solution, you can come up with a better solution by buying individual companies, feel free to reach out to me at preactiveinvestments.com. Fill out the questionnaire, and we put together portfolios for people that are in their names and their accounts. There is no commingling. There is no fund. It's literally anything we buy and sell is for individual clients. And right now we use TD Ameritrade, who basically holds the assets of any of our clients and so forth. So with that, I will see you guys later tonight if you show up at 8:30 for day 53. So you guys have a wonderful evening if I don't see you, and I'll see you at 7:45 tomorrow, unless you chime in this evening at 8:30. I'll talk to you soon. Have a great afternoon, or a great evening. Thank you.